So guys, in this video, we will learn a very important topic, that is the dollar index. So if you are an active trader, please watch this video very carefully till the end because we will cover everything that you need to know about dollar index, right? So we'll start with what is dollar index, how is it calculated, and most importantly, what is its impact on the Indian stock market, right? So what happens to the Indian stock market when dollar index goes up and what happens when it comes down? So let's start first with the very basic question. What is dollar index? So the dollar index measures the relative value of the US dollar with respect to the currencies of the major trading partners of the United States. So who are the trading partners of United States? Well, the big ones are Eurozone, Japan, Canada, Great Britain, Switzerland, and Sweden. So the US dollar index, or USDX as it is called, it measures how strong or how weak the US dollar is as compared to the currencies of all these countries. Right, so basically on one side you have the US dollar and on the other side you have these six currencies. You have Euro, Japanese yen, Canadian dollar, British pound, Swedish krona, and Swiss franc. And of course each of these currencies have been given different weightage depending on their trading volume with United States, right? And Euro obviously has the largest component in the index because US does the major business with the European nations. That's why Euro has a weightage of about 57%. Now a little bit of a history of the dollar index, guys. The index was created back in 1973 with a base value of 100, and the values since then have been relative to this base value. And the currencies that are considered as part of the dollar index, they have only changed once. That is back in 1999 when Euro replaced many European currencies, right? That was the only time it was changed. But there is something that we need to keep in mind, that the trading dynamics of United States has changed significantly in the last 2 decades, right? US is doing much more business with countries such as China and Mexico than some of these countries which are out there in the dollar index. So it is quite possible, in fact it is very, very likely that some of these currencies will be replaced by Chinese yuan and Mexican peso in the coming years. Now, if you guys want to track the value of the dollar index over the years, it's actually very, very easy. All you have to do is go to investing.com and you have to search for the dollar index. This is the symbol, and you can basically see the history of this index, right? So as you can see, 1985, it actually went to somewhere around 165, and the lowest point was in 2008 during the Lehman crisis. It went down to about 70, and as of today, it is trading somewhere around 95. Now, what are the factors that affect the value of dollar index? Now, there are many macroeconomic factors that affect the dollar index, such as trade imbalances among these countries, market sentiment, policies set by the US Federal Reserve, as well as the economic cycles such as recessions and economic growth in these countries. See, but the practical thing is that as a trader, you will not be worried about all these things, right? You need to focus on what is really important to you, which is the impact of the dollar index on the Indian market. So in order to understand the impact of dollar index on our Indian market, we have to categorize the companies into 2 parts: importing companies and exporting companies. Now, importing companies, they import raw materials like commodities from outside of India. So they have to make the payment for these raw materials in the US dollars, right? So when the dollar index goes up, these companies have to spend more rupees in order to buy the same amount of raw materials that they used to buy earlier, right? Therefore, a rise in the dollar index is considered negative for these importing companies. So generally what we have seen is that the stocks of sectors such as capital goods or banks and oil and gas, which are much more focused on the domestic consumption, they fall with the rise in the dollar index. Now on the other hand, stocks of the export oriented sectors such as IT and pharma, they benefit when the US dollar goes up. Now this happens because these companies get paid in the US dollars, but they report their earnings in Indian rupees, right? So if the US dollar goes up, for the same dollar revenue that they have earned, now they will be reporting a higher revenue because it's going to be in the rupee terms. And that is why an increase in dollar index is considered to be positive for stock of IT companies and pharma companies. But guys, all said and done, there is one thing to keep in mind. Just because the dollar index is going up or going down does not mean that our market will go up and go down, right? It is just another factor to keep into consideration. So guys, that is pretty much it about the dollar index. And if you want to test your understanding of the dollar index or the understanding of stock market in general, we have created a bunch of quizzes about this topic. You might want to take one of those quizzes from the link below and see how you do.